Mic check. 1, 2, 3. All right. I think we are good to go. Let's get this show on the road. All right. Hello, everybody. Good to be back after a nice weekend. I hope everyone had a good weekend. I hope you had a great weekend, and I hope it was restful. Turn off. Okay. So a couple things there, and we can go ahead and begin. We're going to prep for the week today. We're going to take a look at economic calendar, and then we're going to take a look and see what we can expect for this week as we get into the second week of December. So let's head to the charts and see what's going on here. So, okay, so for this week, first things first, we have a lot of volatility this week. 10-year bond auction, if you've never experienced one of those, well, it can lead to some pretty interesting price action at 1 o'clock p.m. on Monday. So that's the core thing on Monday that everything's going to be setting up for. Tuesday, CPI, and a 30-year bond auction. So if you're not paying attention to yields, you probably should be. ICT does have lessons all over that, so continue and look at those ahead of time. Wednesday, of course, FOMC at 2 o'clock. Typically, this is a two-stage delivery during the press conference. So if you've never traded FOMC, we'll get there on Wednesday. Thursday, unemployment claims, as you all know, that can be quite volatile. And Friday, flash PMI along with Empire State Manufacturing. So huge amounts of volatility this week. So just be careful. Put your seatbelts on. We're going to go for one hell of a ride this week. And let's head over to the charts. So we're going to take a look at dollar index first. See what happened this week. So we know this. Let's take a look at the weekly here. Actually, let's look at the monthly because that's going to set up everything, right? So these levels are all monthly levels. I hadn't marked them deeply, but the ones that I do care about. Oops, that's not what I wanted to do. The ones that I do care about are these right here. So these two right here. So note that I marked those as monthly inversion fair value gap highs because you can kind of see where we are in this price action. We are heading back up to that area. We potentially could head all the way up to 104.881 before we reject, but I would like us, if we are going to head higher, I would prefer us to immediately rebalance off of that balanced price range and then head lower to target this previous month's low. And ultimately, I would say these relative candle open and close lows from following that. This lines up quite well with the typical tendency in December for us to have a more bullish December as we go into January. So one thing to keep in mind is that this is also an election year. So we might not get the typical bearish January that we're looking for, at least not until mid-January. So there's some truth to the Santa Claus rally, and we will be looking for setups to take that and have that be a part of our repertoire. So from a dollar perspective, we see on the weekly, that we have had some movement lower generally in dollar. We don't really have a fair value gap in the dollar until you head all the way down to here. So this is where I would expect us to have potentially a weekly sell side imbalance to reach for. If we go below this short-term low, then I think we could reach for this, or of course this monthly short-term low there. Again, I think that we might use this as an inversion fair value gap on the monthly, but on the weekly, we see we've got a bearish order block here, and we've got an imbalance, sell side imbalance, buy side inefficiency, which we've tagged into just briefly the previous week. So I would like for us to see us maybe head down into this bullish order block and then head up into that inversion fair value gap for the week. So let's see what happens from a daily perspective. Next, same chart, just different levels. So as you can see, we on the daily, we immediately dropped below this inversion fair value gap, and then we dropped completely down. Now we are seeing a little bit of a retrace, and we're seeing candle highs start to trade above this short-term high here. So if that is the case, then and we see this bullish order block supported here. So I would like for us to see dollar head higher first. That would, hey Anas El Alami, good to see you, brother. Hope you had a good weekend. How's your weekend? We're talking dollar right now before we head into the NASDAQ chart. And yeah, so with dollar, if we are looking for it to revisit this inversion fair value gap, it has to go up first. That would kind of lean into what is happening with price the beginning of this week. We would like to see dollar head up, take out these short-term highs, and that would allow us to have a little bit lower beginning of the week, followed by a rejection on dollar. That would lead to an increase in price as we head down into this 102.46, 47 level. So that's what I'm thinking on the dollar. Let's take a look at something here. So I was looking to see on the these three are E-mini. You can kind of see here. E-mini is the red, orange is NASDAQ over here, and blue is YM. So we're looking to see at this peak have any SMT divergences occurred yet. And so far we need to wait for a little bit more data for this to occur, but you can kind of see how E-mini, if it stays here, it potentially could form a SMT diversion, because we see NASDAQ from this point to this point and YM from this point to this point. We see those as lower highs to higher highs, lower highs to higher highs, and then E-mini is higher high to lower high. So this is what I start to see on the daily as a potential smart money concept reversal. So I'm keeping my eye on that, especially on E-mini, to see if it rallies. This could completely discredit that SMT diversion, but I'm watching it closely. So let's head over to the charts, though. Let's head over to NASDAQ. And we'll start on the weekly for NASDAQ. So as you all know, the week traded down first and then headed upwards. So this week, if we're looking for price to continue upwards and tag at least that monthly intermediate term high, which we have marked out right up here, this monthly intermediate term high, well, we would like for us to head down, potentially take out, last week's low, or if we aren't going to take out last week's low, then what we might look for here is the midpoint of the low to high. So roughly 15,871.25, we'll say. And we will mark that as a weekly. And we will also make that into a dashed line, so we know that that's a weekly level, and we know that that could be a potential area to retrace if we are to head down that way and head higher. Then I would like for us on the weekly chart, I would like for us to see that weekly chart bounce off of that midpoint level and then to go no deeper than that, because that would give us a hint that we might be headed back upwards. Now, there is a new week opening gap, an old new week opening gap, just south of here, and we could see some price action react off of that as well. So there could be a couple of things on the weekly there. So that's what we're looking at on the weekly, a bounce lower first, and then expansion higher to take out potentially that monthly intermediate term high. maybe this weekly bearish order block, ultimately aiming for that weekly premium CPI high. And what do I mean? So over here on the weekly chart, you should also see back on January of 2022 that there's a weekly fair value gap, specifically a size sell side imbalance, buy side inefficiency that we could potentially aim for if we were to break this monthly. This big thick blue line is a monthly intermediate term high. Okay, so if we are to break that, where could we potentially head to next? Well, there's a weekly bearish order block. We could potentially head towards that, and that should be at 16530.25. And need to fix that value there as well. Okay, so we have the weekly bearish order block we could aim for and then reject. We could aim for the weekly sell side imbalance, buy side inefficiency, and then reject. So those are all targets that I'm looking for on the top side on the weekly. Do I foresee us potentially pulling a 180 and heading all the way back down here? Well, it is FOMC, so FOMC week. And so there's a lot of stuff that could happen. There's a huge range that we could head down to. There's even, if I take a look at this here, so if we take a look at the candle swing low down here, oops, swing low to this candle close swing high, we actually see that there's a fair value gap down here within optimal trade entry. So on the weekly, let me see if I can mark this out for you. If I can just shift this over a little bit so you can see the weekly. So you can kind of see these weekly discount BISI. This is the one that I really care about. If we're going to head lower first before we go higher, I would prefer us to see a bit of a retracement down into that level in the first half of the week. And then we rocket up and knock all those shorts out. That's what I would love to see. That's if we were able to get the ideal setup, that's what I would be looking for. Given seasonal tendencies and given what I see here on the current range. So that's what I'm aiming for on the weekly. So let's go down to the daily then. Oops, that's not what I wanted to do. Stay on the weekly on this one. And then the daily should be here. Okay, so we've got the daily chart here. We know that these are our areas that we're going to aim for. What's happening right this moment? Well, we see that first off, we see that we traded above this opening price of 16,147, right? We traded above that. And so that's what I deem as a run into this rejection block as we headed a little bit lower. So I think that despite us dropping lower to head higher, I think that we can do something similar this week. One thing I would want to have on my charts, though, is so the difference between here and here, we want to also have this daily 954.50, I would say. And this one is a daily. And we want to make this a dashed line to signify that it's a consequent encroachment, or a middle point rather, on the daily wick. And I can also drop something down here and kind of mark this as the 1 day down wick, or previous 1 day down wick consequent encroachment. Okay, so we have that key level. We have this bullish order block on the daily that we might want to also draw out as well, right? So we have that. Let's just put it out until 5 p.m. on the end of the week. And we can mark this as a bullish order block. This is a close open of 15898.75. Is that right? 15898.75. And we can mark that as well as a potential downside target. Now, keep in mind, we went down straight to that bullish order block one time already. So we don't necessarily need to go to refer to that again. But just in case, I'll have that there on my charts, right? Just in case, because I know that's within the past 3 days. And if I know that if we head down there, we potentially could see some other things there as well. Let me remove some of these. Okay, so we're keeping this in mind. We're keeping this in mind that there's a low here. There's a bullish order block coupled with that low. And there's a consequent encroachment here. If it doesn't need to get that low, then it could just reject from there and bounce. So that's it on the daily that we see. Obviously, to the upside, we have this daily short-term high and this daily wick consequent encroachment. I guess technically I could do the same thing here and write the exact date, 12/8. Down wick consequent encroachment. So we've got our key levels on the daily that potentially we could reach down to first and then bounce up. Note that if we do head downwards on this day and we get past new week opening gap as well, there is a tiny little volume imbalance down here that I believe we're going to draw to. It's very small, but it is there nevertheless, right? So we want to make sure we have that on our charts as well. And have that here, have that there. Well, I need to make this a little bit bigger so I can get the exact, there we go. So there's a little volume imbalance down there that I will be looking for as well in our price for us to, that leads us down. It's right below the previous new week opening gap as well. You'll see these gray lines that I've marked as old new week opening gap. The current week's new week opening gap is so small that it is almost insignificant. We'll touch upon that when we get to the lower time frames, but let's head down to the hourly chart from here because we have everything on our daily that we care about now. And we want to now see what else is there on the hourly that we could potentially use. So we know that this is the daily down wick here. We know that this is a daily, and I can make this color purple, dark magenta rather. So we know that there's those up wick and down wick areas that we might want to keep our eyes out for. We noticed that at the end of the day yesterday, we ended up taking out a bullish order block and then rebound and then bouncing off of that, taking buy stops right there. So that means that we see in Asia, we're seeing this range creep lower and lower. That's what, if we think about it from a weekly expansion, weekly accumulation, power of 3, manipulation, and then expansion higher. That's what we want to see at the beginning of the week. We want to see price head downwards first, give us that setup. Maybe during FOMC it takes out, maybe it takes out that wick low there and heads into this hourly range. You know, who knows? But we want to see price manipulate lower first. Now, I would prefer us to see some accumulation first, but let's see. You know. So currently for Monday, if this range continues or if it continues downwards, then this wick 15,954 is going to be the level to look for, as it is also coupled with a rejection block to the upside. So that's it on the hourly. We have our higher time frames annotated, of course, so we have what we need to refer higher, and we can do so. And we can shift all these over a little bit because we'll have to shift all these over for the new week anyways. This weekend we'll actually revamp this when we get to a lower time frame. But yeah, these we can all shift over as they are important to us. So we see all these weekly levels, very important here. Okay. So for Monday, we needed to tell us what direction it's willing to go, but I would prefer down first before we expand higher for the week. And this 60-minute has not given us a lower low just yet, so I imagine that we might head quite low during FOMC and then skyrocket higher as well. On the 15-minute, let's take a look at this. So on the 15-minute, we see that this used to be relative equal highs. We are going to now mark this one as relative equal high, and we'll just mark it to the end of Monday at 5 o'clock, and then we can roll it. Each day we find something else there. So we'll mark it on Monday for now so that we know that this high of 16,119 we want to mark this out because it could be of reference during the morning, right? And we can consider them to be relative equal highs. They might not look like it, but these two, they're close enough where those can be considered relative equal highs. I mean, they're also very, very close to the upwick here, as well as the daily, potentially daily intermediate term high. I should have kept this on the daily. I keep forgetting to do that. Okay, cool. So this is the daily chart, of course. And you can kind of see that 16,119 relative equal high buy side is being queued up to hit later on, I think. Okay. So we've talked about the 15-minute just for now. We see that price is continuing downwards in Asia. That's a nice solid 25, 30 point move in Asia. If you're trading Asia, I'm not, but there are people that trade it and they get lucky as well, but maybe they stay up and trade London as well. So we are not going to be London traders anytime soon because we need sleep. But yeah, that's our thesis for the week. I don't think we need to really necessarily go down into these lower time frame areas, but watch out for this. We can call it a gap for it to head down there. Maybe head down to this bullish order block and then jump up all the way back for just London, Asia, and London for today. And then we would like for us to see whatever price is at midnight open for the week. We want to draw that out over time, as well as your Asia accumulation sessions. So that's about it. Let me open the floor for any questions. Are there any questions on what we expect, considering dollar DXY, its behavior as it approaches an inversion fair value gap and potentially heads lower? Or NASDAQ as well. Are there any questions out there? Anything you're wondering? Let me see. I guess I could check and see how many people are even here. Oh. Okay, well, don't see anyone, but not seeing any questions in the chat, so that's okay. You know, maybe y'all are still digesting this a little bit, but yeah. So back on the daily, you know where I'm looking at these three. I see this as a clear bullish order block. We traded down to it. Ideally, if we're bullish, we don't want to see this. We don't want to see this midpoint, this down wick, consequent encroachment of this wick here. We don't want to see that really tried or tested. Otherwise, it could skyrocket down and head into trade for this low here. So bias is bullish for now with the Judas swing or an initial manipulation lower first. So that's power of 3 right there on the weekly chart. Great. Okay. Leon Senna, hello. What kind of trading method do you use? Yes, I typically am trading inner circle trader concepts. That's my background. I mean, that's where I switched to after years of trading candlestick theory. I tried to do the strat. I tried to do EMA, SMA crossovers. I've tried to use Heikin-Ashi candles. Tried to use Bollinger Bands. There's a lot of stuff that I've tried, and Inner Circle Trader is what I started studying in October of 2022. So it's been a little bit over a year, and I feel more comfortable trading now than I did before. Good question. Hopefully that answered your question, Leon. But yeah, just have to give props to Inner Circle Trader. I'm actually looking forward to some of the stuff that is coming out soon. On December 25th of this year, he's going to be releasing the charter content that all of his charter members got a chance to see. So, Anas El Alami question is, what's your opinion about the silver bullet? Which one? There's a whole bunch of silver bullets, actually. I love it. It's phenomenal. Let me see if I can find an example in the previous days. So let's take a look at solely London silver bullet, right? I think I'm gonna have to use a lower time frame, but you can kind of see this previous week. This is Friday, Thursday, Wednesday, Tuesday, and then of course Monday. And that's the beginning of the week right here. Let's see, Anas said, I did learn it. Start watching it on a chart. Makes sense for me. Yes, you need to find hundreds of examples of this from time frame to time frame for you to see this work. So on the hourly time frame, you're probably not going to see the silver bullet as easily. But if you start going down to maybe a 5-minute time frame, and we'll take a look at this as an example. So for instance here, right? On Monday, 10 o'clock a.m., it's this range, 10 o'clock, or this is London Open. So here, let me see if I can pull this off. There's one silver bullet at 3 o'clock to 4 o'clock. This was the easier one to see. You can kind of see this traded up and into this region here. That is one silver bullet right there. If we go down to a lower time frame, we'll probably find one here as well. So let's go down to a 1-minute time frame. And let's go back to Monday's price action. So a little bit too far there. Here we go. So London, right, runs. So now we start to get into the 10 o'clock a.m. time frame here, right? So here we've already been going down quite a bit. This one was a little bit more difficult here. There's nothing that's easy to see on the 1-minute time frame. But you can use other concepts here. Actually, there was one here. This is an advanced concept, so I wouldn't recommend you need to take or study this yet. But we did see price take out some of the stops right here, reject here, headed lower. Now we see this as an inversion fair value gap, and then we see price came back up to it, rejected immediately, and headed lower. If we go one step lower than that even, let me see if I have a 15-second. Let me duplicate this one. Go up to a 15-second chart. Let me see how much data I have on this one to see if I have enough data. I'll need to go back 10 days. Let this load. 12.4. Okay, so we're going back to that 10 o'clock a.m. time frame, right? So we're on a 15-second chart now. And you can kind of see how we've accumulated. There's relative equal lows here. So look at what happens here. And this is advanced. So, I mean, if you haven't done enough back testing yet, you need to find what is good for you. But if you take a look at these relative equal lows here, what happens when we drop below the lower of the two, right? We see what? What is this here? This is a sell side imbalance, buy side inefficiency. And this is on a lower time frame though. So if you can see this, this is a fair value gap displacement. So displacement, you're waiting for displacement below relative equal low here. And then you can kind of see now there's always some sort of fair value gap. It's going to be on some sort of time frame, but there's always going to be one. So I actually really like that 10 a.m. silver bullet. And I would recommend people check that out as well. I think it's very valuable. Leon, thank you for your answer. Yeah, absolutely. Absolutely. Looks like Anas, I prefer 5 a.m. session. Oh yeah, London Open. That's cool. That's cool. Yeah, you might be in a time zone where that is better for trading. I'm in New York, so I appreciate New York's trading a little bit better. Kirk, good to see you, brother. How you doing, man? Love the new charts. Yeah, no, I'm glad that you guys you enjoy it. It should be a lot cleaner. Over the weekend, actually on Friday, I released 2 videos where I completely erased my whole NASDAQ chart here. And I tried to make it much cleaner. I tried to give it confines so that we only charted the things that we cared about here. And I'll try to keep it clean every single day. I'll go back and delete any of the lines that don't matter anymore so that we can focus in on only what we care about for that day, right? For instance, we can see on the daily, we have this previous day's high. And I actually can mark that as previous day's high. Relative equal highs plus Friday's high. So I can keep that marked there, get a sense of like, hey, what's going on here? See where price potentially could draw to as it created relative equal highs there. You know, it's a lot cleaner there. You can see the same color coding you can have there. Kevin Zhu, thank God Johnny made a new chart, much cleaner. Yes, yes. I took the feedback. I mean, it was really, first it started with some of the folks here telling me that the charts are too busy, and then I think Hydra also told he had mentioned that my charts are too busy. So I take good feedback. I mean, it's valid feedback, and this hopefully helps people be able to see the crystal clearly what levels I care about now within the IPTA data range. So you can kind of see the vertical lines are defining my IPTA data range. If you haven't taken that lesson, that's a little bit more advanced of an ICT concept. I recommend you study very, very slowly. You don't have to rush into that kind of stuff. Just take it one lesson at a time. And yeah, I mean, on the daily, we do have stuff well below us, but all these blue lines you see here, they're either daily or weekly or monthly short-term highs. Basically, I'm looking for short-term highs that we can reach for, or key levels that we might reverse at. So anything that's a buy side liquidity, I've launched as a blue line. Anything that's a sell side liquidity, you see this is a dark, what's the color here? Dark red. So that makes it a little easier for the eyes when we go down to a lower time frame. We can instantly tell, hey, you know, we saw a previous short-term high. This was a previous buy-side liquidity. Maybe if I trade back down to it, it could bounce off of there or trade through and treat it as a rejection point, right? So I try to keep that in mind here based on roughly what is in premium versus what's in discount. So yeah. Yeah, good stuff. Good stuff. So we're pretty much going to be looking for price to head lower for us to head higher this week. There's nothing more really that we can state for this week. We've had 1, 2, 3, 4, 5, 6 weeks of straight green price action, and we kind of left these as relative equal highs. They're about 57 or 50 points difference here. So given that this particular week itself is very, very volatile, we could see some pretty big movements in the coming days. We want to keep in mind seasonality. December is generally a bullish month. We want to keep in mind that generally if we want to see a more bullish movement, we might need to retrace first. So we see these fair value gaps that we pointed out earlier in the stream. We want to make sure we are cognizant of these, and if we trade down to them, that we treat them as potential for us to head higher despite us being in quite a bit of a premium. So the core here is combining what we see in the dollar, the DXY index, combining that with what we see in the markets and how shorts are constantly being squeezed. Everybody's trying to short now. They're getting squeezed. Every single short, they're getting squeezed. Yanevo, do you use the body or wick for Fibonacci measurements for either optimal trade entry or premium and discount? Good question. I actually keep an eye on both, but if I'm going to be using one, if I were to choose one to use, I would use the bodies. Just because that's where the majority of the price action occurred. Yes, you have wicks. So yes, you might be able to, like, you know, I will use both generally, but I try to see, hey, like, if I use the bodies, generally that's sufficient enough for me, because I like looking at this run, for instance, I can see that this run from a weekly perspective, this run optimal trade entry begins at 50% here, goes down to about 62% roughly. And what else happens to be there? Well, there's this combined 2-week weekly bullish order block. There's also a fair value gap, a discount fair value gap on the weekly, this discount buy side imbalance. So you start to see, can you start to see how when you look for specific confluences that you start to see, okay, well, my model, maybe I'm only trading a return to optimal trade entry with a bullish order block and a fair value gap. Well, I can see that on the weekly chart. I know it's only a matter of time before it hits that. And then gives me a little bit there, right? On the weekly chart, I know it can and will head down to there at some point. It doesn't have to be this week, but at some point, this will be important to refer to. And if we took a look at the swing low, for example, so this swing low to this swing high, we would actually get something very, very similar, Yanevo. Does this, because we have this 50% line here. You draw this out over here. So we have this 50% line here, right? That would be the equilibrium from swing low to swing high currently. And we see that this 50 to 60% range, it's a little wider. We see that the weekly buy side imbalance is within that area, so it's still valid, but I get a much cleaner measurement if I just take it from the bodies. So generally, I will be taking it from the bodies, but on occasion, I'll check the swings as well to make sure there's nothing else that we might be missing. Hopefully that was helpful. Good question, Yanebo, though. Really, really good question. So yeah, I mean, couple all the concepts I just talked about on the weekly chart alone, couple that with the seasonal tendencies of December being bullish. Well, yes, can it fail, and could we just drop out and plummet? Yeah, sure. But in general, especially since this is a really specifically an election year, the sitting president doesn't want to have like the market tank on an election year, right? So that's why I'm thinking if we head lower to around here or here first, we could then use that to propel us into some of the highs that we have here, potentially annual highs as well. Now, one thing to keep in mind, we take a look over at E-mini here. Let's see, this is the 12 contract. Okay, that's not a really good chart for it, but I think SPX and SPY have started to create all-time highs as well. I can't show you that on these charts because these are only futures charts, but let me see if I can pull it up on on TradingView. So if we take a look at, let's duplicate this one here, and let's go into E-mini, or actually let's go look at SPY, because that's the one that most everyone is aware of, right? So looking at SPY, we've created a higher high and are actually aiming for some of the next monthly all-time monthly highs is what we're aiming for next, right? This is on a monthly chart as well. We can kind of see how we came down to this bullish order block here on SPY, and then we've come to skyrocket. I do think that we end up making potentially a all-time high this year on SPY, but that's not guaranteed, but I do think that we're headed that way. So there's a lot of things to be watching out for, right? Lots of good stuff here. And of course, we will be watching this Asian range. So on the 1 minute, we see that we have an Asian range roughly here to here right now. So for everyone here, one thing I would recommend is, and you don't have to leave this on your charts, but one thing I recommend, and let me make this into something that can be seen on all charts. Let's maybe make it a breaker template for the time being. So we can head up to a higher time frame chart. So you kind of see how this is the current Asian range here. Generally, I would recommend you pull this Asian range out throughout the rest of your trading day and see how it gets referred to, either in London open or in London close. So this is a little, before I close, I want to show you something. It's a really quite simple thing that any ICT trader, simple secret that any ICT trader has come across, but maybe doesn't pay super attention to. Okay, so let's start with Friday's Asia range over here. Okay, let's go down to a 15-minute just so it's a little bit easier to see. So Friday, we have Friday's Asian range here, right? Now, imagine that we now see Monday, Tuesday, Wednesday, Thursday, Friday all the way through, right? if I take that Friday's Asian range and I move it all the way to the end of the week, look at how many times it was referred to, right? We saw a swing above, we saw consolidation, we saw accumulation here, swing down, but then what did we head up to again? This range here, Friday's Asian high. We accumulate, we see manipulation to take out a previous day's high, and then we come back down. What do we come back down to? You see that candle? It refers to the high of the Asian range and this fair value gap. And then from there, we drop back down, go into this fair value gap, come back up to the Asian range. We see it dawdle around here, and it wicks down below here, comes back here. Where do the bodies of the candles go? They refer back to this Asian range again. And then coincidentally spike up for the rest of the day, and we see a huge, huge day. That's only one of those Asian ranges. That's for the week, okay? Let me show you something else that you might not have seen or you don't pay attention to, but I would recommend you do pay attention to. Look at this range here, Monday's Asian range. Let's just draw it out for a power of 3 perspective. We know for power of 3, generally we know for power of 3 that we have roughly something that looks like this. So we have roughly an open, a high, a low, and a close, right? What happens here? We have this open accumulation, this Judas swing to take out. So there's this high. Judas swing to take this out. Asian range drops below this short-term low, so we have a market structure shift there. What price does price go up to? Right at that 8:30 a.m. It hits the bottom, the low of Asian range, and then expands lower through New York, hits a low, retraces, and then continues like that for the rest of the day, closing at a higher level than the low. So these are little things that I have incorporated back into my trading because I had to go back through and figure out some of the kinks that were in my plan. This is one of the tools that you can also use to really level up your range game, as long as you make sure that Asian range is set through your days, at least that trading days charts. You'll start to see how it's referred to each and every day. There are some rules where if Asia and London takes over Asia's range, there are some rules about that instead, as you can kind of see here on Friday where it happened here on London's range. But then you can clearly see that we still had, we still had an accumulation, right? Manipulation downwards to here. Expansion all the way back up to here, right? And then we eventually we had us close around here. So this is manipulation, accumulation, manipulation, down, and then expansion to the upside. So there are some rules to this. You want to check back with the Market Maker series on ICT's channel to really go back and study this. But this is something that I will be incorporating into my live trading this week. And I will be around to live trade on Tuesday, Wednesday, and Thursday. I'm taking all of those days off to be here with you and to trade with you. I'm super excited to get back in there to get some of these get some of these accounts built up. And yeah, I'm super excited to come trade with you on Tuesday, Wednesday, and Thursday. I'll be trading the New York sessions. So on us, I won't be able to trade London just because I'm too tired at that time. I need some sleep to have some good trades, A+ trades. So we'll look for a really great week this week, and hopefully every single night we'll prepare for the following day, look at what setups are forming, and yeah, even if you trade London, you can use that same thing that I just taught you. You can use that same concept to really hone your London range and where would the Judas swing be. So that's it for today, folks. And I need to get going because I need some sleep as well. And I have to go prep for the week because I am still working Monday and Friday. But I hope this was helpful. I hope this was beneficial to you. And if it was, give me a like, and I just greatly appreciate it. If you comment, if there's anything that you need, let me know. It's pretty, it doesn't really harm anybody by giving it a like. But for those that haven't watched it, for those that have watched it already, thank you for checking out the How to Chart Clearly with the monthly example there. I'm planning on doing that each and every month, and I will likely chart out maybe in the next month when it gets to the beginning of the month, once we get back from New Year's, because I actually won't be here. I'll be taking a few days off towards the really end of the year to travel internationally. So I will let you know what dates those are as it gets closer, so that you know to also take that time off, and to really to make sure that you're taking time off to hang out with friends and family as well if you have them, or just take some time for yourself, like that's really key. So I will be doing that towards the end of the year, and heading off to Europe. So we'll not be here for the beginning of the year. I'll probably be back charting maybe Jan 3, 4, 5-ish time frame, but I'll be out on the 20, pretty much Christmas onwards. So I'll see if I can pull in a trade or two, but pretty much enjoying the holidays then. So just as a heads up, if I don't post anything, then you'll know why. But yeah, I mean, I think that we'll be able to get some pretty good trades as we move forward into the end of December. And yeah, I mean, thank you very much for watching those couple videos on charting, watching all the videos so far, coming here and supporting. I am so grateful for, let me see, I think we're at 866 subscribers. That's ridiculous. So super honored to be here and to both entertain, but also maybe educate some folks that are new to ICT, based on the knowledge that I've gained over immersing myself in that area. I'm not perfect by any means. People have seen me kind of like, people have seen the difficult and the kind of like rage trade type tendencies that I'm trying to get away from. I think Kevin was here for that, trading too much. But we're getting better. At the end of the day, we're just getting better. And that's what I want this community who follows me to be supportive of, people wanting to get better in trading. That's it. It's hard enough trying to trade with a 9-to-5, but making it work even harder. So want to thank you from the bottom of my heart. Appreciate having you here. Have a good night. Get some rest. Drink some water. Stay hydrated. And we'll catch up with you in the morning. And I'll try to be on by 7 a.m. New York Kill Zone Open. No guarantees that I'll be on, but if I can't be on by that point, it'll be sometime between 7 and 8. So, all right, everybody. Well, I don't see any other questions here, so I think I'm gonna go ahead and if I just don't see any other questions, so I think I'll go ahead and close out New York today. Kill Zone Open. And yeah, thanks for watching, and appreciate the likes and subscribes. If you're not subscribed, appreciate that. Subscribe only, obviously, like only if you think this is valuable to you or if I can be of service to you. But again, appreciate the likes. Have a good night, everybody. Good preparation session. We'll catch up tomorrow morning. Take care.